The greatest inventor no one has ever heard of, better than Buffett, the man who launched the Quant revolution on Wall Street and solved the market. The veil of secrecy has now been pierced. On Business Talk with Jim Campbell, Gregory Zuckerman, special writer at the Wall Street Journal, three-time winner of the Gerald Loeb Award, which is the highest honor in business journalism. Been on our show several times, 4 times, in fact, I counted. The greatest trade ever, the behind-the-scenes story of John Paulson, how he defied Wall Street and made financial history. The Frackers, the outrageous inside story of the new billionaire Wildcatters. Also on the show with his 2 sons, they collaborated with their dad, rising above how 11 athletes overcame challenges in their youth to become stars. And this latest book has been shortlisted for the 2019 Business Book of the Year award. It is The Man Who Solved the Market, how Jim Simons launched the Quant revolution. Welcome back, Greg. Always good to talk to you.
Great to be here again.
Okay, so I'm a Buffett guy, so this guy always kind of offends me, these guys that just do it on pure algos. Tell us who Jim Simons is.
Sure. Jim Simons is the greatest moneymaker in the history of modern finance. His track record is 66% a year since 1988. He runs a fund called Renaissance Technologies. That's the firm, and the fund is called Medallion, and that's the one that destroys everybody else's records. And it's about $10 billion in size, and Simons is a mathematician. He's a scientist. He goes down as one of the greatest geometers of the past 50, 100 years. And he left it all, left academia to try his hand at investing. His colleagues were sort of unhappy with him. His family was disappointed. Why are you giving up that career to try to trade? It was sort of beneath them, especially some of those colleagues. But he had a sense that there was another way to invest. At the time, everyone either was doing the Buffett way, talking to management and looking at financial reports, or they sort of saw the market as random walk and don't even try. And he said, yeah, I think there's some patterns beneath the surface that people don't realize. In some ways, his approach is akin to tactical trading, but on a much, much, much more sophisticated level. And he began doing these like predictive algorithms before Facebook, before Amazon, before Netflix, and machine learning. So he broke the mold. He's really the pioneer in this approach that today dominates Wall Street.
You know, just said something at the beginning. The size of the fund is $10 billion. Part of his returns that he's kept it smaller. In other words, I guess right? I mean,
it is, yeah.
That's a brilliant idea because Buffett is so friggin' big now. It's hard to get the rate of change right on a big base.
That's exactly right. So some people have said, well, Greg, how do you compare him to Buffett?
Yeah.
You know, market cap of Berkshire Hathaway is like $150 billion or something. And I counter by saying, well, no one forced Buffett and other people like John Paulson and others to get so big. And Jim Simons realized that the bigger they got, if they got too big, the returns would be hurt. So he capped the fund. He kicked out all his outside investors in the early 2000s and said, we're going to keep this not small, but relatively small, smaller than it could be, at $10 billion. I mean, they leverage up, so they do get over $100 billion in the holdings. But, they only manage about $10 billion, and it's only their own money. So don't try to get in there. They will say thanks, but no thanks.
He just depressed me, I think.
Yeah.
Send him a check as soon as we get off the air. So he was a Cold War breaker. What's his math expertise, or what gave him the insights? And these guys don't think like they're not. Well, you know, they're not into money normally, these math guys, right? The professorial types.
Most of them. That's what makes Jim Simons kind of unique, because he could do the math. He was at Stony Brook. He led Stony Brook's math department for a number of years and really is one of the greatest geometers over the past 100 years. A lot of his work still has an impact in areas of mathematics and physics elsewhere as well. And some of the people around him, people he's hired over the years, go down in history as some of the greatest mathematicians. So he doesn't hire from Wall Street. He doesn't want anybody from Wall Street. Anybody who's got some experience trading or investing, he doesn't want to hear from you. They just, and like you said, many of the people, that's the irony of my whole book. These are people who aren't even sure capitalism is the best system. They're not really interested in business. They don't care about the names of the stocks themselves, the companies. I have some examples in the book where they embarrass themselves in meetings where they refer to companies that don't even exist anymore when they're talking to outsiders. But Simons is a little bit of an exception, though, to the rule. He is a mathematician and a quant and develops algorithms, but he also is a guy who drinks and smokes, and he's funny and mischievous, and you wouldn't mind having a beer with. So he's not your prototypical mathematician, and he loves money, and he wanted to become a billionaire at a young age, partly to impact society, I think. Other people have other theories. And, yeah, today he's worth $23 billion. He's one of the biggest funders of basic science. He subsidizes math and science teachers throughout New York State so that they don't go and leave to join private companies. So he's a fascinating individual.
Could you able to deal with that smoking? It seems like he just smoked like a lunatic.
It's fascinating. I mean, he's the exception to the rule in so many ways. He's 81, close to 82, sharp as a tack still, pretty good health, and smokes like a chimney still. And, yeah, if you're going to go meet with Jim Simons, you got to deal with it. But he's one of the greatest investors in history, so you deal with it.
You started to get into a little bit. Tell us what he's doing now with his money. And, you mentioned autism. Asperger's, there's a lot of Asperger's guys that are very good on Wall Street, right, because they're so numerically and they're so focused.
Yeah, it's a good point. And you'd be surprised how many people, maybe not surprised, how many people for this book I interviewed, and I'm not just talking about people at Renaissance, but just sort of big mathematicians who have something in the family, who they themselves have autism or their kids or some. There's some relation. I'm no doctor, but there seems to be some relation, some connection. And yes, so Simons in his family also has some autism, somebody, and I don't know if they can come up with a cure, but he is funding all kinds of interesting new approaches for treatments. And he says to these guys, I'm 81, I want to find some treatments before I'm gone. So he puts pressure on the scientists. He gives them all kinds of money and support, both in data, also data help because he's a data guy, technology, computer science, etc. But he says, I want results in the next few years, so it'd be fascinating to see. I mean,
was there a link between whatever was behind his his code-breaking skills and insights into, is it directly transferable or what?
Yes and no, not really, but yeah, as you suggest, he left academia. He was teaching at Harvard and then at MIT, and he got a better paid offer to help the government break the Russian code during the Cold War. And at the time, the U.S. government, wasn't doing a great job of understanding the messages being sent back and forth by the Russians, and they were, unfortunately, they could decipher our messages. So Simons and his colleagues were tasked with turning things around, and they did. And he learned some skills, some really important skills there, among them how to build an algorithm, how to keep an organization really, really secretive on the outside, but really collegial on the inside. And that's the model of his firm, Renaissance Technologies. They're the most secretive firm on Wall Street. They sign these 30-page NDAs. It's hard to get anybody to talk. Trust me, this was the hardest project I've ever gone through in my life, because people just kind of laughed at me when I said, "Oh, will you speak about Renaissance Technologies?" Eventually, I broke them down, and they did speak, but it was really difficult, and that's what the organization is like. They don't talk to anybody on the outside, but on the inside, they're really collegial. Everybody works together. There's millions of lines of code that anybody can access within the firm. There's no company like it that I've come across in the world where they're so collegial. They work together. People make presentations to a room of like 70 to 100 people, and they talk and they pick each other apart, and they work together like no other company. Every other company in Wall Street has silos. You have a star in an office there, and this one manages his own portfolio there. It's not like that at Renaissance.
Yeah, in fact, I was going to get to this in the second segment, but while we're on it, it is very interesting because it's the opposite of the silo approach, and How did you, and you talk about it almost like a mafia to get into. How did you break into it, and how did you do 400 interviews?
Yeah, so, right, at first, not only was Simons not talking to me, he was telling his people not to talk to me, and then I would set up these meetings with people in the industry, senior people, and then the night before I'd get like a text, "Greg, sorry, we can't meet with you." Why? well, Jim asked us not to. I'm like, Jim's your competitor. Why do you care what Jim Simons thinks? No, it's Jim Simons. You don't want to offend Jim Simons, who's like you said, a mafia don kind of thing. But eventually, I got him to talk because, frankly, I think the people that went through this experience, that solved the market, that created this firm that's going to go down in history, on some level they wanted to talk. Maybe it was, not on the record, and some of them have left years ago, and they figured, okay, what's Jim going to do to me? It's been a few decades, etc. So eventually, you try enough people, you get enough people, and then each time I would speak to someone, they'd get in touch with Jim. "Oh, I just spoke to this guy, Greg Zuckerman. He's not going away. I don't know He won't stop calling, etc. And then eventually I got Jim to talk, not about the secrets, not about, he didn't open the kimono, but he gave me a lot of stuff. He was really helpful, so I have to thank him as well for working with me.
Is he happy with the book, or thinks it's been a good thing to shed some light on his record?
Well, a few months before it came out, he asked me, do I still have to do this book? So, Jim, it's being printed as we speak, sorry. So he was never happy with the experience, but subsequently he seemed fine with it. Yeah, he gave me a few critiques when I shared the manuscript with him, and 2 or 3 of the 4 changes he requested I made. The 4th one I think he was wrong on in terms of timing and some things. So he seemed fine with it, yes. So listen, I can't speak for him. I don't want to put words in his mouth, but I haven't been heard too many complaints, so that's good.
This is Business Talk with Jim Campbell. We'll be right back with Greg. More on Renaissance Technologies. Jim Simons, the next segment.
Are you from California, Illinois, New York, Georgia, or any of the other 39 states that charge state income tax? Does your state claim you owe them any amount of back taxes? Or have you not filed in years? Is your heart pounding because you know they're wrong or you just don't have the money? Don't fight the state income tax board alone. The Tax Doctor is here to help you. The state is much more aggressive than the IRS in collecting taxes. They have the power to take your home, your car, your driver's and business licenses, even garnish your wages, freeze your bank accounts, and go after your spouse. Solve all your income tax problems permanently and keep more of your hard-earned money. Make this 100% guaranteed risk-free call right now.
800-985-1610. 800-985-1610. 800-985-1610. That's 800-985-1610.
We're back. Our guest is Wall Street Journal special writer Greg Zuckerman. I want to go back now to looking at the quant revolution side of it. And by the way, his returns after fees are 39% a year with off your seat, which is just unbelievable. He charged 5% under assets and then 20% of the gains. That's pretty high, isn't it?
He actually today charges 5 and 44, so 44%
really
of their gains you have to give up to the investors. Although again, the investors are themselves mostly.
I was going to say, so is that does he have an outside fund still? Another fund or?
Later in their career, in their lives, they did. In other words, about a decade or so ago, they started some outside funds, which are rather big, and they do well, but they don't do as well as the core one, and there are various reasons for that. And they're not even trying to do as well as the core one. The core one, this medallion one, is the one that goes down in history, but the other ones do fine.
Can you tell me what is the fundamental insight? Is he this bringing order out of chaos, data mining? What is he doing that nobody else seems to be able to do at his at least his performance level?
Well, there are a lot of things. One thing is he doesn't make predictions. He doesn't predict where oil is going or Microsoft or Facebook shares are going. It's all about relationships among investments. So he, generally speaking, holds 5,000 stocks long, 5,000 stocks are short, and he looks for these relationships, a group of stocks versus another group of stocks, a group of stocks versus a factor versus an index, etc. He doesn't even try to do what you and I do, is say, where is the Dow going kind of thing. So that's one thing. The second thing is his holding period is really short. He's not a flash trader. He's not a high-frequency trader, but they hold their investments generally about 2 days. So they're looking for short-term patterns in the market, and they use every kind of data possible. They've got pricing data going back to the 1700s, stuff that no one else has, but they also have every other kind of data. You know, today you can find, if you want to know what aisle of CVS is more popular than another aisle and what products are more popular, given that people have phones on them, you could track that stuff. So they consume every kind of possible data, and they test everything. And they hired astronomers. They hire physicists. They hire mathematicians from around the country, top guys, people that lead departments, Stanford, etc. They'll hire all these guys. So they have a whole different kind of approach, looking for patterns that you and I can't pick up with the naked eye.
Is it arbitraging, short differentials between things like this rapidly?
I mean, it's It's not even like they're not stepping in front of people. They're looking for 2-day patterns. They're akin to technical analysts in some ways, technical traders, but on a much, much, much more sophisticated level. But in some ways, they're looking for these patterns that are beneath the surface, and you don't really notice, but they repeat themselves. And in some ways, they take advantage of the mistakes that you and I make, or at least that I make, the panic, the greed. A lot of their best years are when everybody else is suffering, 2000, 2008. And their argument is that when they've got the patterns, they know how markets repeat, where things are going, and when you and I panic, they're the ones on the other side buying off it.
Did they start off with currencies and commodities and things like that? Currencies went to floating exchange rates and everything. Was there something that they first saw that they could basically manipulate?
I wouldn't say manipulate, but they first began in 1978. This is Jim Simons doing currencies, but frankly, it took them 12 years to get this thing going, to figure out the right approach. They had all kinds of twists and turns and stumbles along the way, and panics and existential crises. So, as a writer, I was a little concerned, given this track record, that they turn on the switch and they start making a lot of money. But in some ways, it was relieving to know that even these guys, these geniuses, go through so many crises, and they needed tenacity and perseverance, and frankly, they need some good luck too. There's a turning point in the book in 1996 where they finally figured out equities. They couldn't really make much money in equities from 78 to 1996, and they almost gave up. And Simons gave his people 6 months, and he was going to pull the plug. And then they figured out there was a mistake, that one of their numbers wasn't updating. It was like an S&P 500 number that was static and should have been updating. And, frankly, if they hadn't picked up on the mistake, and it was more of a junior guy that found it, and a guy who was about to get fired even. So there was some drama behind the scenes. But if they hadn't figured that number out, who knows? They wouldn't have maybe figured out equities, and then they'd be known as sort of, as you say, commodities or a currency kind of firm, a smaller firm, but not what they are today, the greatest traders in the history of modern finance.
You have a great line that you call, he was blindsided by life. Talk a little bit about his life. He had some tragedies and stuff, but what did you mean by blindsided? This man that has insight in the markets, but blindsided by his own life.
Yeah, so that was one of the lessons I took from my research and from the book, that you can be Jim Simons, you could be worth $23 billion and build your empire on the fact that you can make predictions. You know where things are going. He knows where the market's going. He knows where prices are going. And yet in his own life, he was blindsided by what happened to him. He had 2 sons who tragically died. One was died after an elderly driver backed into him. He was riding a bicycle right past just at that 1 second, and the other in a free diving accident. He's had other kinds of tragedies in his life. So it sort of just reinforces, for me anyway, and I think for the readers, that one can make predictions and be the best at making predictions in one area of life, but when it comes to broader things in life, day-to-day things, family, one can't predict. It just sort of underscores the fragility of life.
Those failures you talked about for the first decade or whatever, plus these tragedies, does he have tremendous resilience, or is there some characteristic there?
He really does. He's really a remarkable guy. I'm a jaded, cynical reporter, and looking for the faults to some extent. And this guy, I'm not saying he doesn't have faults, and you'll see him in the book, and it's warts and all portrayal, but he's not perfect. But he is really a special, unique person, and in some ways, I think it's a management book as much as a trading, investing book. You can learn all kinds of fascinating, at least I did, techniques he has in terms of hiring. He doesn't hire for need. He doesn't say, okay, we need this, we need that kind of person in the firm. It's all just hiring talent, and he motivates them. He looks for curious, super smart people, and he gets them all working together somehow. These are big personalities and egos, and he gets them working together. So he is a fascinating guy because he can do the math, but he also understands people. And
he's a nice guy?
Yeah, he's not a bad guy. He's a good guy. He's the kind of guy you really do want to have a beer with or a smoke if you do still smoke. Not that I'm encouraging smoking. He's gone through lots of things in life, and he shows that resilience, and he's dealt with things that you and I would never want to even come close to dealing with, even in exchange for $23 billion. But he's also doing things like trying to understand the beginnings of the universe. So now, in his last career, his last chapter of his life...
Yeah, I read... Origins of the universe? That seems a little esoteric.
Whether whether the Big Bang is accurate. He's built a $70 million observatory in Chile to look for evidence of the Big Bang. He's at the forefront of autism research. He really may come up, he and his people, the people he's funding, come up with treatments for autism in the next few years. He's doing all kinds of interesting things when it comes to other philanthropies, education, like I said, subsidizing teachers. He's always thinking about new things, but he is a really interesting individual, and he keeps working. He's 81, worth as I said, $23 billion. He's got the big $200 million yacht, so I don't want to suggest he's not enjoying himself. He does, and he's got a nice home too. But he's trying to improve society, and I admire that personally. Here he is, 81 years old, and he's still getting to the office early and working hard and pushing his people and come up with new ways to try to improve the world. I really admire that.
Coming next, the man responsible for Trump. We're back with Greg Zuckerman. The new book is The Man Who Solved the Market, How Jim Simons Launched the Quant Revolution. And there's some link to Trump coming out of Renaissance as well. But before we get that, I just want to finish up. They're doing this 5,000 long, 5,000 short, trading 2 days max and whatever. Is there a feeling about, they don't even know what the companies do. They don't care. I mean, is there a feeling that this is meaningful?
They feel it's meaningful. They feel that these are mathematicians and scientists, and it's the greatest challenge of their lives, trying to best the market. It's a challenge no one else has really succeeded in, and they think they have. So they feel it's meaningful. Do we want so many brilliant mathematicians and scientists trading stocks? Is that good for society? You can argue it's not great. Maybe they should be curing cancer and figuring out other kinds of things. But some of them make so much money. I mean, many of the people that walk away there are worth 10, 20, 30 million, even more, and they often do really good things with their money. Yeah.
Let me ask this, which is interesting. You were saying that he often makes money when the markets are crashing and everybody's panicking, and that makes sense to me. But given that it's all algo, computer, machine learning, AI, all that driven, what happens when we have these black swan events like in 2008 when everything craters? Does there a human adjustment element that comes in judgment or what?
Sometimes he, in the past, has stepped in and pulled them back, their exposure back. People within the firm, the scientists, get really upset because he's a little bit old school. Yeah, he's a scientist, but he also, at one point in his life, traded like you and I do, and he made some pretty good money back in the day, trading gold and silver and looking at the news. So Jim Simons, likes sometimes in periods of crisis, just pull their exposure back. But again, it causes kind of some tension within the firm, and lately they do much less of it. Now that he's older and doesn't work there day-to-day, they do much less of it. It's all pretty much machine learning, which creates even more concern and panic within the firm. I mean, think about it. You and I, when the market's down and we're losing a lot of money, we kind of know why we're losing the money. We're not happy about it, but we know why. These guys have to spend days and sometimes weeks figuring out why they're making money or losing money. And in a crisis, it's really disconcerting. They come in, everything's red, and they don't know why because they're machines. It's machine learning, and their machines have decided to buy something or sell something. They can figure it out, and they do. It's all based on algorithms they've developed, but it takes them a little bit to figure it out.
Now, I find this fascinating. You wrote a book on John Paulson, and Paulson made this greatest trade ever on a fundamental insight, which is, the mortgage market was going to have to collapse. And there were a lot of bad bets, and he took the opposite side of that. And now this guy is the greatest long-term investor ever, and he's done basically the exact opposite, right?
That's true.
His insight is unobservable data.
It's patterns that you and I can't pick up on, and there are no insights about where the world is going.
Right.
It is in some ways completely opposite approach. As a writer, it's fun to explore both of them, yeah.
And do you find both of them valid, or do you find that Simons has been basically acquitted because Paulson hasn't done that well since then?
Yeah, I've really come around to the view that we need systems and rules, and it's not just about investing. Surely about investing. If you look at the best businesses today, they're all models. You look at Amazon, you look at Netflix.
Yes.
You look at even doctors today are embracing checklists like surgeons. Pilots have checklists. So if you're not going to have a system that governs your decisions, you at least need some real rules that you govern what you do, because it avoids all kinds of behavioral mistakes. We've all read and heard about all the silly stuff that we inadvertently make, the mistakes we make, the panic, the greed, all kinds of inadvertent stuff that we call behavioral economics, and that's what a system deals with, an automated system, so that you don't make those panic moves. And frankly, I find it kind of sad that when it comes to investing, you've got people like Jim Simons who use systems and make correct decisions, but other decisions in our lives, like in the White House, the Federal Reserve, people are still using sort of gut instinct and intuition, and it kind of scares me as a citizen.
And bad data or made-up data.
Or not even any data.
Exactly, or no data.
Yeah, and so Jim, I have come around to the view, not just because John Paulson has underperformed since the greatest trade ever, but just I do believe that in this complicated world with so much new data, so much new information, you need some structure to make your decisions. The scientific method, hypotheses, testing things, I think that beats kind of gut intuition and judgment.
By the way, that was a good segue into where I want to go right now. He had a partner in his firm, Robert Mercer, who also not that well known, but who may have been the reason that Trump got elected. So talk about him.
Yeah, the fascinating thing is Jim Simons himself is left-leaning. He supported Hillary Clinton. He's got some other left-leaning causes. He's not a liberal by any stretch of the imagination, but, a little left of center. But his colleagues come from all kinds of different various viewpoints, including this guy, Robert Mercer, who is more right-wing, and Robert Mercer, who is a billionaire in his own right and was the co-CEO of the firm, he got behind Donald Trump at a really important time when he was flailing in August 2016 after the Billy Bush video came out. And Mercer and his daughter Rebecca went to Trump and said, if you want to turn this thing around, if you want to win the White House, you've got to put in your campaign two people that are very close to us, and that's Steve Bannon and that's Kellyanne Conway. And you can love Bannon and Conway or hate them, but they completely turned that campaign around, the Trump campaign, and that's why he's in the White House. And it's because if Robert Mercer and Rebecca Mercer hadn't pushed Trump to include them, then it wouldn't have happened. And they played other roles, too. They played a role in the campaign, in Brexit, and other kind of things. So eventually it kind of split the firm because some people were not happy with what Robert Mercer was doing, and eventually he had to step down just because of morale issues. Although he's still there, he's still a senior researcher, he just doesn't have the role of co-CEO.
What I found interesting is these guys, as you know, are the most data-driven people in the world, and Mercer is obviously brilliant. And he's like buying a lot of this Trump stuff. There's no climate change problem, things like that. And what did he call Bill Clinton a rapist and a murderer? And which seems sort of out of character for what's driving the successful part of his investing business.
Yes, Robert Mercer and his colleagues are complex individuals, some of the smartest individuals you're ever going to meet in your life, but quite complex. And that's what people around him could not understand. Why, on the one hand, Robert, are you relying on data day to day? It's all about data and the scientific method. And when it comes to your personal life, he believes in some theories like urine, analyzing urine. There's a scientist out in Oregon who's trying to understand our urine and maybe get some breakthroughs there. All kinds of examples like that. And he confounded his own colleagues with that contradiction.
Now, this is maybe where this kind of data and algorithmic approaches can be dangerous, right? Because he was also involved with Cambridge Analytica, right, which had basically a profound role in being able to micro-target people and help Trump, even if it was sort of misinformation-driven.
Yeah, that's true. That's true. You don't want to go too far. So some people have heard, my critiques of the government and say, so you want them just to embrace Cambridge Analytica and all the data behind that, et cetera. And, Robert Mercer, they owned Cambridge Analytica. They were he and his daughter were important there. Right. So listen, there's some man plus machine approach that I think works in life, in Wall Street too. That's sort of where a lot of people on Wall Street are heading. People like Steve Cohen, et cetera. It doesn't have to be all machine. Many of us are uncomfortable turning all our decisions over to machines, but it could be machine. The way that they do it at Simon's firm at Renaissance is actually machines that are informed by men. So it's not all machines just letting them loose, turn on the machine, and everything goes bonkers. No, there are humans working with the machines, but you do have to have that that message. And the key is the data, and relying on data, and relying on science. So, when it comes to global warming, et cetera, it's all about the science, and that's what the people internally would say at Renaissance.
So let me ask this. Steve Bannon has been out for a long time. Have you heard, either directly through him or scuttlebutt, whether Mercer is still enchanted with Trump as he goes into the election?
My understanding is yes. Robert Mercer and his daughter Rebecca Mercer, they're happy with Trump, not with everything he's done, but they're generally happy with Trump, but they were not happy with the publicity that came with supporting Trump. So they pulled back publicly in terms of their support, in terms of playing important roles behind the scenes, influencing the government, calling up Trump, et cetera. They used to be much closer. So they're not comfortable with that public role. Mm-hmm. But privately, I think they like the fact that Trump cut taxes, that he's cut regulations, and the judges, all that, the conservative judges. So I think in general they've been happy with Trump.
Is he a guy that would speak with you?
No, Robert Mercer hardly even speaks to his own colleagues.
Yeah.
I mean, again, that's the thing that jumped out at me about these individuals. They're just colorful and odd in some ways. So, Robert Mercer is one of the most brilliant scientists, computer scientists out there, and he helped run this firm and solve the market, and yet within the firm even, he whistles all day long, usually classical tunes. He hardly even talks to people internally unless he's picking on them for being liberal. So he likes in the lunchroom to start fights and bait people and tease them. And for a long time, he was just sort of seen as a quirky guy. And then, lo and behold, people are like, wait, isn't this the guy that's putting Trump in the White House? So at that point, some people started getting a little bit concerned. But, he hardly talks to even his own colleagues. He talks to Peter Brown, who's the CEO. That they're still close. But he's just an odd, interesting individual. I sort of tend to, as a writer, find myself writing about these kind of quirky, colorful characters.
Yep, you do. They're great books. Our final national segment coming right up. More on the greatest investor, Jim Simons.
Would you like to host your own radio program or podcast? Park City Productions 06604 is a Bridgeport, Connecticut-based radio broadcast solutions company. Follow us on Instagram, like us on Facebook, and subscribe to our YouTube channel. That's Park City Productions 06604. Call us at 203-522-8801.
Special writer of the Wall Street Journal, Greg Zuckerman, last segment. This guy's been so successful, and it's rules-driven, as you said, primarily. Why hasn't it been copied more, or why hasn't anybody been able to match it more?
Yeah, it's a good question. Partly what they do is just very unique. They hire differently. They hire better than everybody else. Today, everybody wants to work there. If you're a scientist and you're thinking about going to work at a hedge fund, this is the place you're first going to turn to. I mean, everybody else hires PhDs. These guys hire heads of departments. They've got a series of different advantages over the people. They're really, really good at understanding how their trading impacts the market. So, in other words, you can have a great trade idea, and they think that that's not the most important reason why they do so well. But they're better. They think they're better than other people at understanding how their trading will impact a stock. Let's say you think you should be buying this group of stocks. Well, what if you buy it and then it pushes the stock up too much? Then you've hurt your profits. They've got techniques to do that buying and selling and not impact the market as much. So they take pride in the sort of the little things that maybe other people don't.
Hard to take the emotion out, which is what they're doing there. When a stock is riding up, it's hard to trade against it. What is his current level of involvement? You kind of imply that he's not really going in anymore for that. And is the performance staying up independent of him?
Yeah, he pretty much has the greatest life anyone can imagine. He goes into the office every once in a while, chairs a meeting, maybe asks a couple questions. That's about it. He usually stays in Manhattan. Their offices, the hedge fund's offices, are out in Long Island. Jim Simons is usually in Manhattan at his foundation, and he makes about $1.5 billion a year for hardly going into the office, and he gives it away. So, and it's a pretty good life.
Do they do risk management in any particularly different way? And I look at long-term capital management, right, and they had supposedly the greatest trader there, John Meriwether, and they went down the tubes, right, in that Russian default in 97. Do they have any risk management techniques or something that allow them to not be susceptible to a sudden event like that?
Well, what they've done is they've tried to distinguish themselves from people like LTCM, and for a while they were concerned because LTCM was a bunch of geniuses, supposed geniuses, PhDs and such, and the people at Renaissance were like, wait, hold on a second, we kind of do similar things, maybe we're going to also have these same kind of issues. And one thing they realize is they are not as beholden to their model. So yes, they have trading models that govern their actions, but they're also a little bit wary of relying on them 100%, so they're always checking them. They don't double down. So if you remember LTCM, they saw some really good trades, and they were losing money, but they said, well, these opportunities are even greater. We're going to put even more money into it, and we're going to leverage up. They don't really do that at Renaissance. When they start losing some money, they re-examine. They look at the algorithms and say, has the market changed? And, going forward, what I pose to them internally is, how can you guys keep doing as well as you are, given that the market is changing? You don't have individuals to take advantage of. It's all quants versus quants, and everybody else is doing passive and investing. And the market itself is really, the nature of the market is changing. And yet they continue to do well. You asked about how they've done. They were up about 50% last year, and the market was up 30, but they still keep beating the market.
Unbelievable.
They've got a great
I was impressed, too, that on the Sharpe ratio, which it doesn't matter, people know, but it has to do with stability of the portfolio, they're both more stable with lower risk, which is hard to believe.
Yes. So my argument is they've got a series of maybe 25, 30 things they do better than everybody else. Each one, there's no one secret sauce. People are kind of saying, well, what's the one reason? There's no one reason. Internally, they say that they're not even sure why they're so much better, but I think they do about 25, 30 things that I talk about in my book better than everybody else. And then what they do is they create a really stable stream of profits, like a casino kind of thing. They only get it right about 51% of the time.
That's amazing. That amazed me, yeah.
And then they use that stable stream, that Sharpe ratio you referred to leverage up. So they do use a lot of leverage, and they can get really good terms on leverage from Wall Street because they hardly have a down month. They never have any down years.
Sounds like Madoff.
Right. Well, some people have raised the question of whether they are Madoff. I don't think so. There are all kinds of reasons why they're not, partly because it's only their own money. They don't represent money from outsiders.
Right.
The SEC spent 2 years in there after Madoff because they were worried also that they're too much like Madoff. So they're sort of like Madoff without the fraud.
Which is probably a good idea.
Yeah.
If an individual, you can't get into their main fund, medallion, if an individual does, is that RIEF, the equity fund? Is there a fund that somebody can put money into, a normal Joe like us?
Yes and no. They do have some funds that outsiders invest in. As you mentioned, this REEF fund, RIEF, is one or two others. It's only for institutions, though.
Yeah, I was going to say, you have to have high net worth.
High net worth or institutions, yes. But they have feeder funds, and so some smaller investors potentially can get in there.
Do that fund, the REEF or whatever you call it, what would returns? I mean, is it half of the 39 or
not
half?
Even? No, they do a little bit better. They try to do better than the S&P 500 with less volatility. And most years they've been able to, not all the time. So it's a good fund. It's not a great fund.
Okay.
In some ways, I think he's going to be known as much for his philanthropy and these other kind of efforts as his trading, especially if he can have a home run when it comes to figuring out how the universe began or in terms of autism research. I mean, that'd be an amazing last chapter in his career.
Yeah, Bill Gates-like, right?
Yeah, in some ways, right. Gates has had a lot of impact, and Simons is hoping to as well, and that may be how he's best remembered, not just for his math, not for his code breaking, not for his trading, but for curing autism or figuring out how the universe began.
Okay, now you say you look into, you write books on all these fascinating guys. Are you revealing where you're going next or not?
I've got some ideas. I'm not sure. I'm open for suggestions if people can reach out to me. I've got some interests. I don't know. For every book I write, there's like 3 or 4 that I pursued that I gave up. I said it's not interesting enough. People won't respond to it, etc. So I've got a few ideas, but I don't want to jinx myself by talking about them yet.
Are you just driven by this is what I'm most interested in, as opposed to the market? You'd make more money if you did X, Y. What drives you?
It's a combination. It's usually the characters. I'm in a privileged spot because I get to talk to some of the smartest and most accomplished people in the world, and I'm interested in characters. I'm really I try to learn from them myself. I ask how they overcame challenges in their lives.
Yeah.
The tenacity, where does it come from? I like to learn about it myself. I'm religious with questions about religion, so I ask them about religion. I get to talk to scientists about whether God exists or not. So I'm really, journalists, as a profession, we've been challenged, and it's not a growing area, although, the Journal and the Times are growing, but generally speaking. But it's still a fun one for curious people like myself. So what motivates me is just talking to super smart, interesting, quirky people and telling some story that hasn't been told, some big story. So I'd like to get at some big theme, like here's the quant revolution through the people, the quirky, interesting, odd people.
Yeah, it's great stuff to read. Thanks to Greg. Man who solved the market, how Jim Simons launched the quant revolution. You can search Jim Campbell Radio on the internet and sign up and subscribe now. Thanks to Greg again. Thanks to our national audience. See everybody on the next edition of Business Talk with Jim Campbell.